Welcome back to Cyber Trading University. My name is Adam Rosen. Very happy you could join us here today. Today is day 2 of what we started yesterday, Forex and Fibonacci. How's everybody doing today, by the way? Everybody have a chance to do their homework? To look for the Fibonacci levels? We're going to talk about that today. Please take a moment, by the way, to consider our risk disclosure disclaimer on our screen over here. And that's also obviously available on our website as well, cybertradinguniversity.com. Please be aware that trading the Forex market, like any financial market, involves a certain amount of risk. And we should be aware of that at any time. But without further ado, let's get started. Okay, again, just to recap, we spoke about the Fibonacci tool yesterday as it's used to very simply plot future support and resistance levels. It's best used in trending market conditions, such as the chart we're looking at here, where the market has a tendency to accomplish higher highs or lower lows over a given period of time. Usually the best way I've found to start is with the long-term daily chart going back 6 months to a year. Find a strong trending market, and then we use the Fibonacci level to establish where a higher support or a lower resistance may emerge. Very simply, we take a look at the trend. We start at the bottom left-hand corner, the lowest low of the trend, and we draw our Fibonacci tool up to the top of that recent swing high, and the subsequent levels that emerge are Fibonacci levels: 23.6, 38.2, 50%, 61.8%, 78.6%. And again, if the market crosses back below the 78.6% Fibonacci retracement level, it's pretty much indicative that the market does not have a trend anymore if the Fibonacci levels are violated. Fibonacci levels should contain the market if the market, in fact, does have a very trending condition. Now, those are for Fibonacci retracements. Once the market then subsequently breaks out, what we then do is we use Fibonacci projection levels to anticipate where our future price target most likely should be. In addition, we spoke about the fact that we can use other indicators and oscillators like the RSI, or perhaps the MACD, or perhaps the Bollinger Bands, although I think the RSI and MACD are better suited for this purpose, to look for further confirmation as where to enter and exit the trades. Okay, so we covered all this yesterday, in addition to the fact that Fibonacci is very commonly found in most of our chart patterns that we usually find, like symmetrical triangles, head and shoulders, flag and pennant patterns, things of that nature. And of course, we wrapped up yesterday talking about how Fibonacci is certainly a very crucial role or a crucial element in Elliott wave analysis, which is a method that some of us use to better understand the condition of the market and which way it's most likely to go. And we have a lot of rules in Elliott wave as well. Now, the homework we asked everybody to do is to take a look at the long-term daily charts and to find those currency pairs with the strongest trends. Was anybody able to find a currency pair with a strong trend? I know for those of you in our cyber group throughout the day, you already know what these trends are because we talk about them throughout the day. But if not, we'll be more than happy to, that's what we're really going to do. Dollar yen. Projections and extensions. By the way, you're on private chat. In terms of the question, retracements and projections, an extension and a projection is the same thing. We use both words synonymously. We have retracements that show us where to buy on a pullback, and then extensions or projections that tell us where to take profits once the market's already broken out. Dollar yen, yeah, dollar yen is a candidate. It's not my favorite trending market, but it certainly is something that's kind of interesting. And let's take a look at that together. All right, so first off, we'll take a look at the dollar yen. I'll put, in fact, a blank chart here. And what I want to do is, first of all, show everyone, these are the MT4, the MetaTrader charts, which are available at nearly all Forex brokers these days, including FXCM and many of the other ones. What I always like to do is start with the daily charts. Daily charts just gives us the big picture. Can everybody else hear me okay? Testing the audio and video. Everybody else can hear me okay? Okay, good, good, good. All right, thank you very much. Maybe somebody from Cybertrain University, if you don't mind, please help us out. I think we have somebody with an audio issue here. Oh, I see. They copy and paste. This is helpful. I'll copy and paste this in. Okay. So what we're looking at here is a dollar-yen daily chart. Now, I really like to try to find those currency pairs with a strong directional trend. I'll tell you, the dollar-yen did have a very strong directional trend at one point, and it's kind of subjective. You know, there's a few different ways we can identify what the trend is. What I'm really looking for is something like this. In between these two lines, that was what I really consider a strong directional trend. We see what happened afterwards is that the market started to act in a very much more volatile manner, and that's not good. I don't like this, especially the fact it kind of looks like a head and shoulders pattern. But Euro Aussie is definitely something we're going to take a look at as well. That's a really good suggestion as far as trending markets. There's a couple different ways. One way very easily to define the trend is just on a daily chart, plug in the Bollinger Bands. Now take a look at this. In a trending market condition on a daily chart, this is how I look for a trending market. In a trending market, the market activity tends to remain in between the 20 simple moving average and one Bollinger Band. Obviously, in a trend to the upside, we would see the market remain between the 20 simple moving average and the upper band. In the downtrend, obviously, the opposite holds true. But notice what happened when the trend ended, where the trend turned more to a range. What happened? The market starts to oscillate in between the upper band and lower bands. Upper band, lower band. And that makes it very, very difficult. So I really only want to try to define those trending market conditions. But while we're on the subject of the dollar-yen, then we'll get to the Euro Aussie, Aussie CAD, and a lot of others. Great suggestions. Let's mark off some lines over here. And let's define when the trend was very strong, because I find this exercise kind of helpful. So I see this is a trending market that I really would like to see. And we can all agree here the market had a very strong trend. This is on a daily chart again, dollar-yen. The dates are December 12th of last year through February 24th of this year. That was a very consistent trend. Now what we'll do is we'll go to, let's say, a 4-hour chart, a little bit of a shorter-term chart. And we'll see if the Fibonacci was able to help us out in that respect. Okay? I'm going to take away the indicator for a moment, and we're going to go back. Okay, so this is the beginning of the trend. Now we know these are actually, this is the trend in between these two lines. Again, December 12th last year, February 24th this year. Now let's use the Fibonacci line. Oh, I wanted to show you something before we go any further. When we plot the Fibonacci lines, you know, a lot of charts, they have different ways to pull them up. But what we do on the MT4 charts, you see this button over here? If you hover over the buttons, it's Fibonacci retracement level, okay? We want to set up our Fibonacci levels, first of all. Click on that, and the way we begin is we literally just draw, let's say this is the bottom of the market, we draw it to the top of the market. We always start on the left-hand side of the chart. This is the bottom of the trend, and this would be the top of the trend, okay? But we want to set up the levels. So right-click on the Fibonacci properties, and there are certain default levels that we establish. We talk about the 23.6% level, 38.2%, 50%, 61.8%, and 78.6%. Some other levels will put in a 100%, or etc. These are for the retracement levels. What the calculator is actually doing is it's subtracting these percentages from the top. Okay, so in order to allow the calculator, the Fibonacci calculator, to plot a 23.6% Fibonacci retracement level, we just simply press the add button, and type in 0.236, and then we can give it a little bit of a description. We can say 23.6% Fibo, or whatever, it doesn't matter, just so we know what it means, okay? I'm not going to do it because I already have them here, or we can, and then we can just delete it afterwards. But we can see here, we have the 0.236, 0.382, 0.5, 0.618, 0.786. Those are for Fibonacci retracements. How do we tell the calculator to put in a projection? Well, the calculator is subtracting any one of these percentages, and that gives us a retracement. But we want to plot the projections. We just add in the same numbers, but with a negative sign. So it'll subtract a negative. In other words, it'll add that percentage to the top. So I would add in a negative 0.236, negative 0.382, negative 0.5, negative 0.618, negative 0.786, and even a negative 1, which is a negative 100%, which again plots these lines higher. So you see how we draw these lines. Over here, we have the Fibonacci retracement levels, 23.6, 38.2, 50, 61.8, 78.6. These are the projections above us. Projections are always where the market, we believe it will go. 23.6, 38.2, 50, 61.8, 78.6, and of course 100. Sometimes the 100 is nice to see as well, to see if we literally just double it. So everybody see how that works? When you're adding into the calculator the projections, just put a negative sign in front of it. The levels, I'll type them in over here. 23.6%, 38.2, 50, 61.8, 78.6, and sometimes we use a 100. That would be just a double, 100%. It's nice to see, okay? Some people even use more than that, but I think that's more than enough. So, again, we know that this is the beginning of the trend, so we want to draw the lines. We'll take the lowest low, and we'll draw it up to the next swing high. Let's actually zoom in here. Yeah, it's once you know you plot those levels, it's really easy to kind of figure it out. I mean, it's really easy to use it. Now, this is how we do it. Let's assume, just for argument's sake, we want to take the lowest low. Let's say that lowest low is right over here on 83.84, and that's on December 21st of last year. What we do, we click on the Fibonacci tool button. We bring the mouse down to the lowest low. In an uptrending market, you start the bottom left-hand side and you drag it top right, to the up and right-hand side. So click and hold on to the button and drag it up. And as we see, as we drag it up, the retracements, the projections, they start to expand. Drag it up to the highest high. How do we know that this is the highest high? When we have a sufficient pullback. We didn't really have a sufficient pullback here. We didn't have, well, sort of a sufficient pullback there. But this is really the level that I really like to use, right up in there. I'm using, excuse me, I'm using, for charting, I'm using MetaTrader MT4 charts. One, it's the same thing, MetaTrader MT4. I'm pretty sure Thinkorswim has this as well. I just, you know, out of habit, I tend to use the MetaTrader charts. So I find them to be very helpful. Well, take a look to see what happens. We started the line. This is $1 yen. This is the beginning of the trend. This is the swing high. This is the 38.2% Fibonacci retracement level. And we look for further confirmation. Beautiful double bottom pattern, right? Look for double bottoms. Now, we obviously didn't know this bottom, the first bottom was going to occur, but we see a similar level. Double bottoms and double tops are an excellent way to look for confirmation. Furthermore, we can throw in another indicator such as the RSI. It's an oscillator, the Relative Strength Index, to look for further confirmation. Did this, in fact, give us a confirmation? On a 4-hour chart, it did not, but on a 1-hour chart, I think it could have. October, whoops, what am I doing here? Going the wrong direction. December, okay. 4-hour chart not necessarily is going to do the job, but the 1-hour chart is. Okay, so we see here, beautiful. Again, we always establish a trend on the daily chart, then I'll go to either a 1-hour chart or a 4-hour chart to look for the trade. Okay, so once again, this is the beginning of the trend. This is the top of the swing high. That's when we plot the Fibonacci levels. We pull on back, we pull on down, we see a double bottom over here, very close to 38.2% level. What's the extra source of confirmation? We have two. First of all, we have a double bottom pattern. That's number one. Number two, we have a 38.2% level. That tells us the market came pretty close to that specific level. And number three, take a look to see what the RSI did, the relative strength indicator. We went below and back above 30. That's technically a buy signal. Now, that's true. We had another buy signal over here, but it was not confirmed with the Fibonacci level. Well, actually, it fell back to the 23.6% level, but we did not see a double bottom. I really like to see a double bottom. Yes, this is being recorded, by the way. Okay, so we have three sources of confirmation. We have Fibonacci level, double bottom, and the RSI. We did not have an RSI indication here. We didn't have a Fibonacci or a double bottom on the Fibonacci there, so it was not as concrete. So at this point moving forward, we look to take a position. And oh, by the way, one other thing, I didn't even check, but I'm guessing this is close to a large round figure. Large round figures tend to act as support or resistance in the Forex market. That was 87.00. Large round figures I define as every 50 pips, 86.50, 87, 87.50, etc. So we have a double bottom at a Fibonacci level. It's not going to be a perfect match all the time, but it comes usually pretty close. Okay. That double bottom pattern is really what I look for, though. The RSI, that's nice, too. Let's throw in another indicator. Now, again, I would use one oscillator. We does not necessarily use more than one. But I just want to show you how two different indicators are going to be more or less the same price, same trade signal. Again, the way we use the MACD, this is below, the MACD histograms, moving average convergence and divergence, remember, this is our buy signal according to the RSI. Well, at the same time, we watch the MACD, it's making lower lows, lower lows, lower lows. All of a sudden, starts making higher lows. That's the buy signal. Okay? We don't take the MACD, and we can see this is all about putting different elements of a trade together. So ultimately, any trade we take is confirmed by more than one, source of confirmation, more than one indicator, more than one symptom, and gives us better probabilities of success. The way we actually take this trade is very simple. We go over here, we buy, we go long at this point, we anticipate the double bottom pattern, RSI, nice confirmation. We place our protective stops below the swing lows, give ourselves a little bit of breathing room. That line obviously is not exact. I'm just putting it there to demonstrate. Below the swing lows, below the next large round figure, if possible, 8,700 works well for us. And then I simply wait. I hold on to the trade. I don't take profits here or anywhere close. I anticipate the breakouts. I'm going to take it this way. It's not necessary. I anticipate the breakouts. We take a trade with a Fibonacci anticipating the trend. The trend will be confirmed once the market breaks out. So we had here a high. I have a good idea. I have a really good feeling that we are going to break out. I don't like to take profits early. When we're on the right side of the trend will really reward us. So, it's important to, give it a little bit of, have a little bit of patience as far as taking profits. It can really work to our benefits. But now the market's broken out. Now how do we handle the exits? Well, it's basically the same thing. We're looking at the Fibonacci levels, and we see, okay, at this point, the market broke out over here. What's the first possible place to take profits? Double top, 23.6% Fibonacci level. I would not take profits immediately on the 23.6, but you know what? On the double top, then I would like to. What do we see here as far as an RSI indication? Well, this was actually the highest price. I would not take profits here necessarily. Maybe if we were able to get in very close to the 23.6. And I know looking at the charts, it's easy for me to say, oh, I would not have sold here. I would have sold there. But I really want to try to use, maintain the discipline to try to get in and get out of the trade where it's, I want to double top to try to get out. And I want that to be close to the Fibonacci level. It's not always going to be exact, but just because, I guess my point is, just because the RSI line did that doesn't mean anything. I expect the RSI to cross above 70. It's a trend to the upside. There's a strong trend to the upside. Let me show you one other thing. We'll go back to this chart. But, it really serves a purpose. Remember, these two vertical lines, what do these vertical lines represent? The beginning and the end of a very strong trend to the upside. And I only mention this because I think this is something that comes up a lot with traders. We take a look at the RSI and or another indicator, and we become so ready, to press the button. Let's get in the trade. Let's get out of the trade, without really stepping back and understanding what is really happening in the market. What's happening? What happened in the dollar yen between December 12th and February 24th? It went up. It went up a lot. It went from 83, 8,400 up to 93, 94. It went up 1,000 pips in 2 months. That's a very, very good move. What moved up? Oh, Tesla. What was Tesla up like $23 today or something? What if we had taken profit after going up $1? When the trend is moving in our favor, again, don't be in a rush to take profits. Time in a trending market condition, time is on our side. The more time we wait, usually the more money we're going to make. You bought Tesla, Tesla stock, a year ago, you paid $10 a share. If you closed the trade after a week, you maybe made $1. If you held on to the trade for 2 months, you made $20. If you held on to it for a year, you made $50. If you're still long Tesla now, you probably have made over several, 100 and something dollars. Why? Because the trend is going up. Of course, the trend won't last forever, but as long as a trend still does exist, and remember, we define the trend on a daily chart with a Bollinger Band, so it's a very easy way to quantify when the trend is over. But if there's no sign that the trend is over, before we take profits, count to 30. Maybe count to 30 again. When we're trading pro-trend, it behooves us. It's in our best interest. Wait for better prices. You'll usually get them. But my point again is this is a 4-hour chart of dollar yen, and we know during this period of time it went up a lot, right? Look how many sell signals we got on the RSI, and look how many buy signals we got. How many buy signals do we get on the RSI between this line and this line? That's when the RSI line crosses below and back above 30. How many buy signals do we get? Exactly right. 100%, 1. How many sell signals do we get? 1, 2, 3, 4, 5, 6, 7, 8, 9 signals. 9 to 1. Sell signals versus buy signals. Which signal would have been the best one to take? The buy signal. Right? We would have bought right over here. If we had taken the sell signal, we would have sold here, maybe got stopped out. Here, maybe stopped out, maybe made money, who knows. Here it broke out. Here it broke out. In an uptrend, we will get a lot of sell signals. In a downtrend, we will get a lot of buy signals. It's counterintuitive. We want the signals are actually very rare. We had 10 trade signals in 3 months. We only wanted one of them. We only wanted 10% of all the trade signals. I'll tell you, I know this probably seems very, very logical. This occurred to me one day, and I just started to look at the charts in a completely different way. I said, I said to myself, why am I rushing to sell, to short? Why am I rushing to take profits? Now, of course, we have a limited amount of capital in our account, so we want to get in and then wait for a better entry and get out. But you know what? If you missed the sell signal, don't worry. The next one was probably better. This was the first sell signal. If you missed that, you got out at a better price. If you missed that, a better price. This was a better sell signal. That was a better one. Meaning, if you didn't take profits, let's say you went on vacation and said, "Oh, I missed getting out." If you went on vacation the entire first quarter, you would have done very well. So we look for, and that's the only reason, my whole point, and kind of going off on a tangent, is the fact that look what happened here. We bought at the double bottom of the RSI, right? The RSI buy signal over there, beautiful. That was one really good signal. What happened here? A brand new trader might say, "Uh-oh, that's my sell signal, get out." But we're not, we know what we're doing. We say, no. I'm going to wait as long as possible because I know the trend is going up. Obviously, the chart's going up. I know the more I wait, the probably better it is. So I want to wait for a textbook sell signal. I know I want to sell now, take profits, and then get back in at a lower price. I want to do that too, but I really want that textbook sell signal. What's a textbook sell signal? Double top Fibonacci. And we can see here the RSI showed us divergence, meaning as we're making higher highs, the RSI started to go down. So while we didn't get another sell signal, it was pretty good. It was pretty close. Okay? Any questions so far at all? I know we're kind of flying through this, but now, so moving forward, how do we continue to trade this? Well, this was the former low, and this was the former high. This was low 1. This was high, swing high 1, right? Well, this is now our new low, low 2. So what are we going to do? We're going to redraw the Fibonacci lines. Okay? Let's do this. I'll change this to a very thin line so we can remember where it was. And then I'll draw new ones. This is the new low. Whoops, wrong line. This is the new low, and this is the new high, and I'll change the color so we can differentiate here. We'll make the second one blue. Is this probably too confusing? If it is, I'll erase it. Okay, so those are the first Fibonacci levels. I'll erase it. It's not necessary. These are the first Fibonacci levels. This was our new buy signal. This was our new sell signal, meaning to take profits. Let's erase this now. That we no longer need. Okay, so where we bought, I'm a stickler for keeping everything the same color here. Okay, so where we bought, remember that double bottom pattern? That's where we start our new Fibonacci levels. Where we took profits, that's where we end the new Fibonacci levels. Okay? Questions, are there any settings to be considered for the RSI? Oh, Peter, you're on private chat, by the way. Are there any settings to be considered for the RSI or the MACD? I assume that's what you're referring to. No, I always use the standard settings, 14 periods for the RSI, 12, 26 exponential over 9 period on the MACD. I use standard settings. I want to see the levels that everybody else sees. Okay? Great question, though. Okay, so now we have our new Fibonacci sequence over here, right? This is our new low. This is our new high. At this point, we're waiting for a pullback. We're waiting for our next buy signal. We're looking for a double bottom pattern on a Fibonacci level. Do we have a double bottom pattern here? No, it broke down. Do we have one here? No, it broke down. But look what we have here. What does that look like? If you said head and shoulders, you're correct. 1, 2, 3. It's actually an upside down head and shoulders. It's basically a triple bottom, a reverse head and shoulders, inverse head and shoulders. That's absolutely right. Beautiful signal. We look for double bottoms. We also look for triple bottoms, or perhaps we look for head and shoulders. It's a very common pattern. To take profits, well, the first thing we want to do is, obviously we bought over there, or let's be realistic, we bought over here. We buy at the second shoulder, anticipating it'll be as low as the first shoulder. So we bought over there, more or less. The stop's placed below. Do we take profits immediately? No way. We wait for the breakouts. Did we have a double top at one of the Fibonacci levels? We didn't even hit the Fibonacci levels yet. Would I take profit here? I say no. We didn't get close. We didn't get close enough. But now we hit this level. Was it a double top? No, it went higher and higher. Now we start to see 1, 2, 3, 4, and it's a little bit declining. And we see the RSI is starting to a little bit of a rounded top in the RSI above 70. When we see both together, beautiful time to take profits. And the market actually went up even further. And, this is a 1-hour chart in the dollar yen. This would have given us a buy signal at approximately 8,800, roughly. Take profit at 91.20. That's not to say, by the way, that we couldn't take profits along the way to day trade it. But you know what this does? This trains us to, we might not get the levels exactly right. It's okay. But it trains us to always trade, number one, in the same direction as the trend. Number two, remind us buying low, sell high. We don't want to buy a new high. We don't want to sell a new low. We want to take retracements. We want to try to get a good price. I mean, after all, if we want to buy a house or something, and the housing market in this particular neighborhood is fluctuating between $100,000 to $150,000, back to $110,000, back to $160,000. What do? We tell our realtor, or we tell our agent, put an offer in for $117.50, right? We try to get in at a good price. Same thing with trading. I want a good price. As far as placing stops, I always place stops. The stops are placed below the lows, meaning if we bought over here, for example, or over there, we place our protective stops below the swing lows. How much? It will vary from chart to chart, but generally speaking, I like to place the stops as a general rule of thumb on the other side of the large round figure. The lowest low here was 87.78, which we can round up basically to the 8,800 level. Make sure your protective stops are on the other side of that large round figure. 8,800, 87.50, 87, 86.50, etc. Okay, there's a lot of currency pairs I want to talk about. So I don't want to spend all the time in the dollar yen because it's not even nearly as interesting as some of the other stuff we want to talk about. Let's see here. We had a suggestion. Oh, Euro Aussie, great suggestion here. Okay, so take a look at the Euro Aussie. I'm going to erase everything. And Euro Aussie currently has a trend. So we're going to look for a trade that maybe we can find right now. Euro Aussie, nice trend to the upside. Does it have a trend? Let's go to a daily chart and look at the Bollinger Bands. I would argue, let's say from at least this point, but maybe even this point moving forward, that's when the trend really began. Probably a little bit after that, but we'll use that level, okay? So that's when the big trend began. Let's go to a 4-hour chart. And we take the lowest low, and the lowest low was probably over there. Make this line a little bit easier to see through, okay? So that was the beginning of the trend. Draw our Fibonacci lines the same way. From the absolute lowest low to the next highest high. This is a 4-hour chart. Look to see what happened. Oh, what a beautiful trend. Euro yen, Aussie yen. I would say the Aussie yen, not as much of the euro. If we have time, we'll definitely take a look at both, though. Take a look at this. That's the bottom of the trend, or the beginning of the trend. This is a swing high. What are we looking for? Some sort of consolidation pattern, retracement, double bottom, head and upside down, head and shoulders. Some kind of chart signal that's telling us that the market is pausing here. It's pulling back and it's found a new big level. Where did that occur? 1, 2, 3. At the 50% Fibonacci level. And sometimes you'll see this, it'll spill below the 38.2. This low. I also like to look for large round figures, 141.81. This low, 141.61. This low, 141.83. All of those lows did not break below 141.50. 141.50. But you know what? Let's round this up to the big figure, 142. Take a look at this. Expect those long candlestick wicks. It appears below, but do you see how this works? 1, 2, 3, 4, 5 times we touched 142. I always like to put myself in the opposite shoes as well. What if I was a seller? What if I sold short Euro Aussie, and I see the market and I wanted to go below 140. What if I sold short at 142? Well, here it went down to 141.81. I said, great, that's good. I'm 19 pips. But then it went up. I said, uh-oh. It went down and made new lows, 141.61. Great. I'm making 39 pips, but then it went back up. 142.07. Uh-oh. It didn't even break below 142. 142.08. Here, 141.83, but it quickly back up. If I had sold short at 142, emotionally, this entire experience would have been very, very painful for me. It went down and immediately back up. So if it's painful for a short, if for a seller, it's got to be pretty nice for a buyer. If you bought at 142, there wasn't a lot of time you would have actually gotten nervous. That 50% Fibonacci level was at 141.70, the lowest low, 141.61, not too far below that. So this was a really, really nice buy signal right there. And you had a lot of time. I mean, this July 16th through July 24th, on a 4-hour chart, you had quite a bit of time to take a position in the Euro Aussie. Eventually, we broke out. Don't take profits yet. We're looking for some kind of consolidation pattern at Fibonacci level. Look what we have here. Shoulder, head, shoulder. Does it get any better than that? To buy the Euro Aussie, you could have done so in the second week of July, second or third week in July, at approximately 142 or a little bit higher. You could have realistically taken profits, 148, 149, actually almost 150. I mean, and that occurred the first week in August. We're talking about a 2-week swing trade over here, which, by the way, is my preferred style of trading, is holding a position for a couple weeks at a time. Really nice swing trades. 142 to 148, 600 pips in 2 weeks. How would we have entered this? Very simply, we see the consolidation pattern, and eventually we say, well, I saw it was a support there and there and there. Maybe over here we decide to buy. In any of this area, this was our buy zone. Protective stops placed below the lowest low on the other side of the next large round figure. I drew that line very, very low. It doesn't necessarily have to be that low. I just wanted to show you. Stops below the lowest low. To take profits, Well, this was a top. I didn't know that it was going to top there. We made a higher high. I would have still been very happy. But then I see this big retracement. Remember, we talked about this yesterday. The big retracement that breaks a trend line. Now we can anticipate the second shoulder of a head and shoulders. It's a first shoulder, second shoulder, and the head at the top. So realistically, take profits over here. Why a 4-hour chart? No particular reason. I think that they're great charts to use. I love to do the analysis on a daily chart and then execute a 4-hour chart because really my preferred trading style is swing trading. I don't think you need to day trade the Forex market. I think day trading is a wrong way to go in the Forex market. Why is it that traders day trade? Because it's very dangerous to hold a stock overnight. What if we held a short position on Tesla overnight? We lost 20, 30 points on the position. Forex market is open Sunday through Friday and rarely gaps even over the weekend. Where you place your stop more, 99% of the time is where you're going to get out of the trade. But yeah, to answer your question, yeah, you would have held on to this trade for, about a week and a half, 2 weeks maybe. So, yeah, I mean, it's, look, it's every trader has a little bit of a different style. Where are the questions coming from? I'm sorry, I don't quite understand. If you're an options trader, well, that brings a whole new level, a whole new level to this discussion. We'd have to take into consideration volatility, and time. But yeah, I mean, you could certainly. I don't trade options with the Forex market just because we have enough leverage, leverage in a standard Forex account. Which pairs do I trade mostly? I'll tell you. The answer is I trade those pairs with the strongest trends. I don't limit myself to only, the majors, euro, dollar, pound, dollar, yen, whatever. I don't limit myself only to, the yen crosses. I look for those currency pairs that have the strongest trends. Right now, that includes the euro Aussie. We've had a couple suggestions here for the Aussie Yen. There's another one. Aussie Yen, daily charts. I just look to see what the trend is. I think of the looking for a trend is like looking for the party. Which parties do we go to? Well, my answer is the best ones. Which kind of food do we like to eat? The food that tastes good. Does everybody hear me okay? Testing the audio? You should be able to hear me okay, right? Okay, good. Thank you very much. All right. So, beautiful. Okay, so Aussie Yen daily charts. We had a breakdown over there. I would say that the new trend officially began on July 30th. Let's take away these Bollinger Bands. That's that breakdown. That's a nice trend. 4-hour charts. Let's take a look at it. This is a great example because so far we've only talked about uptrends. Now let's talk about downtrends. And the downtrend, we start at the highest high. We could say that one maybe is over here. Draw down to the next swing low. In fact, let's go back. Let's do this. Let's take that absolute highest high. Look at that. That's a deep retracement. That's a 78.6% retracement level. Double top. Where do we take profits? Double bottom. It would not have been the best place to do so, but, we made money on it. To sell short here on 9,200, in a couple days to take that trade from July 18th to the 24th. Take profits, 8,700, 92 to 87. That's a cool 500-600 pips. Now, the next step is what I want to do is that now that this is our new low, I want to wait for a significant retracement. It's not always going to be one Fibonacci trade follows the next. Sometimes we have to wait. In other words, that was a former high, former low, Fibonacci, this was the exit point. We could plot the lines like this. Doesn't give us a signal at the moment. The reason being is because of consolidating to an extent. We need the Aussie Yen to make another significant move, or we could plot the Fibonacci lines as follows to the lowest low, and then wait for a nice retracement back up high. What we're really waiting for is either the market to make a swift move down, or give us a nice consolidation pattern, maybe a double top, like this, where it's neither case right now. So there's no trade suggested. Euro Yen. Daily charts. Let's take that away. Do we have a trend right now in the Euro Yen? I would say no. The easiest way I've found to define if there is a trend, again, throw in the Bollinger Bands. Is the market trading, does the market remain between one band and another consistently? Here it did. That was a really nice trend. And by the way, that coincided with the dollar-yen trend. Exactly right. December through February. That was a nice trend. But now, I would say no. Now, I happen to think the euro yen will continue to rise over time, but it's no. When I look at a chart like this, I look at this portion of the chart, the trending market, and I think to myself, what's the probability I'm going to make money if I buy the euro yen? And we'll make up a number. I'll say 70%. I'm just making up a number. When the market's in a range bound, upper band, lower band, upper band, lower band, up, down. That's tough. What's the probability I'm going to make money here? Maybe 50%. I look at every chart, I'm thinking about numbers. What's the probability that I'm going to make money? I don't want that at all. I don't want 50% probabilities. I use the standard settings for all of my indicators. 2 standard deviations for the Bollinger Bands with a 20 simple moving average. I always like the standard settings, The reason being is I like to see what indications that other people see. I like to, because a lot of program traders and a lot of discretionary traders, Aussie Kiwi, thank you for reminding me. They place their trades. I want to see what they see. Aussie Kiwi, which is, I have so many pairs. This is great. All right. Nice clean charts. Daily charts. Well, let's first answer the question. Do we have a trend? Throw in the Bollinger Bands. I would say so. Look at the Aussie Kiwi, beautiful trend. The question is, Dave, you're in private chat. Do you ever use the open and closes to draw Fibonacci lines? I use the highs and the lows, the absolute highs and lows. Not the open. It's more trading data. That's the very top of the trend. This goes back to March 14th. Let's go to a 4-hour chart, see how that would have worked out for us. It's the beginning of the trend right there. Take away the Bollinger Bands. Draw the Fibonacci lines from the very, very top to at least the biggest move before a retracement. Oh, beautiful. Look at that. And you can also find shorter term trades. Let's make these lines a little bit thinner just so we can see everything a little bit easier. Oops. Okay. This is in a downtrend. We start beginning and go to the end. A little bit of a messy double top pattern, but nevertheless, 50% Fibonacci level. This told us to sell short right there. We wait for the market to break down. Beautiful. 1, 2, 3 times at the 38.2%, even the 50% Fibonacci projection level. Okay, this is our new low, this is our new high, so we just now drag it forward as follows to the next significant low. Nice double bottom here and here, then the retracement, nice double top. We sell here. Look at this, all the time in the world to take profits. So these are shorter term trades. We're taking a look at the Aussie Kiwi and still 125.50 down to 124.50. I mean, these are 100 pip day trades. Again, we will use different levels. There's not only one Fibonacci. There's not only one way to use Fibonacci. There's a lot of different ways. But I think the value really comes from the sense that it reminds us to trade the right way. What does it remind us to do? Number one, find a trend. Forget the range-bound markets. It doesn't work with Fibonacci, and you know what? We're going to end up losing money anyway. So it's better. Look for the trending markets. Number two, when the trend exists, the trend is your friend. Don't try to pick tops and bottoms. It's $4 trillion a day that goes to the Forex market. If the market wants to go up, it's going to go up with or without us. With or without our mini lots and standard lots and micro lots. Stick with the trend. You have $4 trillion a day that could be your best friend. Number three, Fibonacci reminds us, buy low, sell high. I think if you remember those three elements without any technical indicators, Japanese candlestick analysis, Fibonacci, Elliott wave, Ichimoku clouds, or anything else, if we just remember to only look for trends, only trade trends, always trade in the same directions of trends, buy low, sell high. I mean, I know these are cliches. It's very common knowledge. But how many of us, including myself, break the rules? Follow those simple rules, and I think you're going to find yourself, very pleased with the results. Fibonacci, it's a valuable tool. It helps us refine our entries and anticipate swing highs and profit targets. But the basics of trading is that we want to make money. We want to participate in a trend. We want to, when the housing market is booming, we want to own real estate. We don't try to short a short a condominium in the middle of a housing boom. We obviously would like to be long real estate. It's the same thing in trading the financial markets. I think that sometimes traders, we focus so much time on what's the best moving average, when should I exactly get in, what's the confirmation, what's the signal. All that's great, but we tend sometimes, I think, to forget the basics. And the basics is really, I always try to remind myself, okay, where's the market most likely going to go? The trend. Good. That tells me to buy or sell. Wait, buy low, sell high. That gives me a better place of stops where not in terms of money management, but where we should place stops according to the charts. And then we make the money management is in the position size. That's the last decision we make. It's a lot of fun, though. Practice, practice, practice. It's a never-ending learning experience. I can promise you that. Quick reminder, www.my.cybertradinguniversity.com is our brand new free social networking website where we post trading ideas and articles and little tidbits of information, all for different trades. It's like Facebook, we like to say, but only for trading, so it's better. This is this is obviously being recorded as well. Yes, there'll be a recording. If you go to our website, cybertradinguniversity.com, very shortly after we're done here, there's a button. It's called Course Archives, and a recording of this as well as yesterday's presentations will be available there. As far as what risk-reward ratio do we shoot for? Trending markets will get good risk-reward ratios. I like to look at 3-to-1. 3-to-1 risk-reward ratios. When you have a strong trend, you can find that. By the way, on the social networking site, mycybertradinguniversity.com, look for the Traders Challenge button. That will bring you to our Forex demo accounts trading contest every month. Traders from around the world enter our demo account trading contest, which we discuss in our cyber group as well. Those traders that have the best return on investment are awarded every month, are awarded cash prizes in the form of CTU dollars, Cyber Trading University dollars. The last month's winner won 2,000 CTU dollars, and you can apply towards any one of our online Forex courses. So it's absolutely free to join, and every month. And we just started this month's contest, so you haven't missed anything at all. Moreover than that, we have our cyber group mentoring meetings start today. Myself and Stephanie. Stephanie does just a fantastic job. We discuss various markets throughout the day. We start at 8 a.m. Eastern all the way till 4 p.m. We talk about stock markets, Forex, and so obviously foreign exchange markets, and also stock options, trading strategies, possible setups, and a lot more. And in addition to that, we're running a very special promotion in conjunction with FXCM, Forex Capital Markets, where our Forex course, which is normally $2,000, FXCM has provided us with a grant. They're basically going to pay for your course. So instead of buying the course for $2,000, you would simply fund a trading account, a live trading account, FXCM. You keep your money. You just place into the trading account, and you receive the course for only $20. It's just an administration fee. FXCM is basically paying for your course. Okay? It's a special grant we're running right now for our Ultimate Forex course package. If you'd like to contact us, if you have any questions about this promotion or anything else, you can always contact us directly, 877-70-CYBER, which is 877-702-9237, or you can email us, forex@CTU, that stands for Cyber Trading University, ctutrading.com, forex@ctutrading.com. I'll leave the slide if anybody wants to take this information down as well. Okay, again, our FXCM scholarship reduces the cost of a $2,000 course only to $20. And look, at the minimum, I would say it's education. It's an investment to your trading career. And I think the more we have under our belts, the better the probabilities that our trading accounts will, make money over the long term. And that's what we're all shooting for. That's why we're all here. With that said, I want to thank you all very, very much. It's always a pleasure. Great questions. Big crowd today. Wow. I want to thank you all very much for joining us. Email us if you have any questions, forex@ctutrading.com. I wish you all a great day, a pleasant evening. I look forward to seeing you all back soon. Have a great night, everyone.